Apple just hit $327.50. That is $4.99 trillion. Here is what the numbers really say about the AI upgrade cycle. Apple took 40 years to hit its first $1 trillion in market cap. Then it took 2 years to hit $2 trillion. Then 16 months for $3 trillion. Now Apple is adding roughly $1 trillion of market cap every 12 months. The stock is up 50% in the last 12 months alone. That acceleration is not random. It is directly tied to Apple Intelligence and the AI upgrade cycle that most investors have not fully priced in. The market cap growth is backed by real revenue expansion. Apple's annual revenue has grown from $233 billion in 2015 to over $400 billion today. That is 70% revenue growth in a decade. But the composition of that revenue has changed dramatically. In 2015, the iPhone accounted for 66% of all Apple revenue. Today, it is under 50%. Services revenue has grown from $20 billion to over $120 billion annually. That shift from hardware to services is the single most important financial transformation in the history of the company. Here is where Apple makes its money today. iPhone still leads at $39.3 billion in the most recent quarter. But services has grown to $35 billion, making it almost as large as the iPhone business. 10 years ago, services was a rounding error. Today, it is bigger than the entire revenue of companies like Netflix and Airbnb combined. Wearables came in at $9.8 billion, Mac at $8.4 billion, iPad at $7.2 billion. Every single segment grew year over year for the first time in 3 years. The common thread is Apple Intelligence pulling every product line higher. Services is the financial engine that most analysts underestimate. Apple has over 1 billion paid subscriptions across its platforms. That includes Apple Music, iCloud, Apple TV Plus, Apple Arcade, and the App Store. The gross margin on services revenue is roughly 70%. Compare that to the iPhone at roughly 55%. As services becomes a larger share of Apple's total revenue, the company's overall profit margin expands automatically. Every dollar of services revenue is worth roughly 1.3 times more to Apple's bottom line than a dollar of hardware revenue. That math alone justifies a higher valuation multiple. Apple is a truly global company. The Americas region generates roughly $43 billion in revenue per quarter. Europe contributes $25 billion. Greater China adds $18 billion. Japan contributes $7 billion. The rest of Asia Pacific adds about $9 billion. China is the most interesting story. Revenue in Greater China declined for several quarters as local competitors like Huawei gained ground. But with Apple Intelligence launching in Chinese markets, that trend is reversing. China is Apple's third largest market and the one with the most growth potential. The iPhone is the most profitable product in the history of consumer electronics, and it is getting more profitable. The average selling price of an iPhone has risen from $687 in 2017 to over $900 today. That is a 31% increase. Apple is not selling more iPhones. It is selling more expensive iPhones. Customers are consistently choosing the Pro and Pro Max models, which now start at $1,000. The iPhone 16 Pro Max with 1 terabyte of storage costs $1,600. That is more than the monthly rent in most American cities. And people are buying it because it runs Apple Intelligence features that cheaper models cannot. Here is the key metrics dashboard that tells the full story in one screen. Apple is generating $110 billion in free cash flow annually. That is more than the market cap of most companies. Apple has over $150 billion in cash and marketable securities on the balance sheet. The net cash position after subtracting debt is roughly $45 billion. The operating margin is 31%, among the highest in the technology industry. And Apple has returned over $850 billion to shareholders through buybacks and dividends since 2013. These are not startup numbers. These are the numbers of the most profitable company in the history of capitalism. Now here is the number that changes the story. Apple has spent more money buying its own stock than any company in history. $853 billion since 2013. Apple spent more on buybacks than the entire market cap of Meta or Tesla. But in the first half of this fiscal year, Apple cut its buyback spending by 25%. The reason is AI infrastructure. Apple is building its own AI servers. It is investing in data center capacity. It is spending the cash that previously went to buybacks on AI compute instead. And Apple is not alone. Meta stopped buybacks entirely in the first quarter of 2026. Alphabet issued $84.75 billion in new equity to fund AI. The three most profitable companies on Earth are all making the same capital allocation decision. This comparison makes the shift visible. Apple's buyback spending drops from over $100 billion to $75 billion. Meanwhile, AI capital expenditure rises from $12 billion to $35 billion. The gap is closing. Meta is even more extreme. $0 on buybacks in Q1. $42 billion projected for AI infrastructure. Alphabet is raising $85 billion in new equity specifically for AI build-out. The message from all three is identical. AI infrastructure generates higher long-term returns than buying back stock. When the three largest technology companies in the world make the same bet simultaneously, it is not a coincidence. It is the market pricing the future. Apple is not the only company in the AI smartphone race. Samsung has shipped over 100 million Galaxy AI devices globally. Google has Gemini integrated into the Pixel 9 series. But there is a structural difference. Apple controls the entire stack from the A18 chip to the operating system to the large language model. When Samsung needs a new AI feature, it must coordinate with Google for the model and Qualcomm for the processor. Apple pushes a software update, and the feature works on 300 million devices instantly. That integration advantage compounds over time. Every new AI feature Apple ships increases the switching cost for iPhone users. That is the definition of a widening moat. Apple's research and development spending tells the same story. Apple spent roughly $8 billion on R&D in 2015. This year, that number is projected to exceed $35 billion. That is a 400% increase in 10 years. The vast majority of that increase is going to AI. Apple is hiring AI researchers, building custom AI chips, and developing foundation models. The company that once relied on third-party AI models from Google is now building its own. That vertical integration is expensive in the short term, but in the long term it gives Apple control over its AI destiny. And control over the user experience is the foundation of Apple's premium pricing. Our Kronos AI model has analyzed Apple's historical price data, earnings momentum, valuation multiples, and current market conditions. The model predicts Apple will reach $264.97 over the next 30 days. That is a 19.1% decline from the current price of $327.50. The predicted range is $250.87 to $337.17. The model signals that the recent rally may have gotten ahead of the short-term fundamentals, but the long-term thesis of the AI upgrade cycle remains intact. Here is the bottom line. The bull case says Apple Intelligence drives the biggest upgrade cycle since the iPhone 6. Revenue accelerates past $400 billion annually. Services reaches $50 billion and becomes the primary profit driver. Margins expand as the revenue mix shifts toward high-margin services. $5 trillion becomes $6 trillion. The bear case says AI capital expenditure eats into margins. The buyback cut of 25% reduces earnings per share growth by roughly 3% per year. And the stock at 34 times earnings leaves no room for error. If AI adoption slows or antitrust regulators crack down on the App Store, the valuation multiple contracts. Our view is that the product cycle is real. The 300 million device installed base is a structural advantage that competitors cannot replicate quickly. But the Kronos model predicts a 19% short-term pullback. If you are a long-term investor, that pullback represents an entry opportunity. If you are a trader, the data says wait for a better price. The thesis is intact, but price matters. Every chart and data point behind Apple's $5 trillion valuation is in the description and on our GitHub. Subscribe for daily AI finance analysis tracking how artificial intelligence is reshaping the markets. Do your own research. This is not financial advice. See you in the next one. This video is for educational and entertainment purposes only. It is not financial advice. Past performance does not guarantee future results. Always do your own research and consult a qualified financial advisor before making investment decisions.